G'day guys, Rick here from Perth Bullion Exchange, perthbullion.com.au, and we thought we'd do a quick video, a bit of an educational one, just to, why people buy precious metals, and it's mostly about wealth preservation, and we thought we'd just do a bit of a visualization to sort of get people, make it a bit easier to wrap your head around, I suppose. So we've got some cash laid out here, and we've got an ounce of gold here, so now, bear with us on this, these aren't exact figures, like we've just rounded them into the nearest 100 or whatever. On the average wage from 1994, and then 20 years later in 2014, and then the current year today. So the interesting thing was, and we didn't actually plan this, it just so happened those were the years that we plucked out. But in 1994, the average wage was about $500, right? And it just so happens that that was around about the cost of an ounce of gold at the time in 1994. Now, as we move forward, 20 years later down the road, in 2014, so the average wage had almost doubled to $1,000 a week. Oh, sorry, and these are in weekly terms. But what also had happened was that the gold price had actually gone up considerably more as well. So the gold price was actually at about $1,500 an ounce. So it now took you, what used to take you a week's wages to purchase an ounce of gold, now took you a week and a half of wages to purchase an ounce. And then that only accelerated. So as we move into current year, so the current price of gold is about $3,650, and the average wage is about $1,800. So it's almost now 2 full weeks of work to buy an ounce of gold. So when you look back from 30 years previous, when you were a week's wages bought you an ounce of gold, and today your week's wages only buy you about a half an ounce of gold. And these are just average terms. Obviously everyone earns different amounts of money and things like that, and the prices move left and right, but you can sort of start to see a bit of a trend that, if you were saving a week's wages 30 years ago, it would actually be 2 weeks' wages now in the equivalent of precious metals value. So that's where the store of value comes through, because we haven't got all the data here to answer all the figures exactly. We don't want to give you false figures, but if you go back, you can have a look at some of the house pricings, and a week's wage, so a year's salary used to buy you X. So like it might be, I recall some figures from the early 80s where it was, 3 years salary would be about the equivalent cost of an average home in Australia. Whereas obviously that's not the case anymore. We're talking 6, 7, 8 times. So the value, it's not that the houses have gone up in price, nor is it that the gold's gone up in price. It's the loss of value of the currency in the middle. So it's the medium. It's the medium of exchange that we're using that's losing value, and hence why prices of all real assets are going up. So that's why you buy gold, is because keeping your money, keeping your wealth in this currency that's just a medium of exchange is obviously eroding over time. So unless it's in fixed assets, where some people have done really well in property, it's the same theory with precious metals. It's a real asset that maintains purchasing power. So there's other ratios as well. I think we spoke about gold and silver in one of our previous videos, but there's actually gold to real estate ratios and things like that as well, and those are relatively consistent over time. It's the medium of exchange that gets beaten up in the long run. So like currency loses its purchasing power in the long run. It's just the nature of the beast with currency. Because they're printing fiat currency continually, they're devaluing it. So that's the real reason you buy precious metals. It's a store of value. It's not necessarily to make you money, but so if you work a week today and you want to save that money for your retirement or for your children, you want to save that week's worth of work. If you leave it in cash, in 30 years time, you're going to have half of that week left. So it's only going to buy you 3 days off, for instance. Whereas if you put it into a precious metal, based on historical trends, not financial advice, you would actually have gained a week of your time, if that makes sense. So like by holding that metal, you'll have actually doubled your time in the bank essentially for retirement or your children or otherwise. And people say, oh, you know, but you don't earn interest and all that sort of thing. But that's just not accurate, because if you put interest up against the inflation, the real interest rate, you're negative, you're going backwards anyway. Like, your CPI inflation is higher than the interest rates, so you're actually still going backwards. So like, even though, yeah, your $500 put in the bank 40 years ago might be $1,000 today, it's not going to be the $3,500 that the precious metals is today. So that it's a false narrative when people suggest that, oh yeah, but if you put it in, it would earn XXX, because those earnings are denominated in the same currency that's devaluing. So the real interest rate is that less the CPI. So you end up going backwards still, even if you had it in a very good savings account. There's not too many of those out there right now. So anyway, I'll get off my soapbox there a little bit. It's just a bit of a visual representation so people can sort of maybe get some better understanding around the benefits of buying gold in particular. We were going to do one with silver, but silver's a bit more volatile, and we didn't want to skew the data one way or another, because if you pick a certain year with silver and it was up dramatically, or you can pick another year where it wasn't, you can sort of make the data tell you what you want, whereas gold being a bit more consistent, we thought would be the better one to sort of represent it with. Hope you enjoyed the video. If there's any questions, feel free to drop them below. Otherwise, we'll see you all next week with another educational video.